10-year note yields end the week moving lower. Today getting all the way down to 440. Before closing out the week at 442. That's down about 8 basis points on the day, down about 5 basis points on the week. We did see yields climb earlier in the week at just shy of 460, but all that reversed on weaker data. Today we got weaker sentiment, weaker housing, as well as weaker global services. All that combined, as well as a little sell-off in equities, helped prompt bond prices to move higher and yields move lower, culminating in today's declines in yield. We see it close out at 442, down again 8 basis points on the day. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And as we saw yields kind of hovering near unchanged early in the session, we saw volatility holding steady. However, as we saw those yields moving lower pretty quickly, we started to see volatility tick up. In fact, volatility rose today, got to its highest level, closing level, in about 2 weeks. Lastly, let's talk about what we have next week. Next week, we do get some key data points in durable goods and the Fed's preferred inflation gauge, the PCE data. We also get a 2-year, 5-year, 7-year, and 2-year note floating rate note auction. So we have some supply on the deck, as well as more Fed speakers who will try to clarify some of what's going on, whether it's going to be the elevated inflation or the weaker economic data that the Fed will focus on. So after seeing yields rise midweek, we see them reverse lower to the end of the week, closing down at 442, down 8 basis points on the day, down 5 on the week. Ahead of next week's durable goods, PCE data, auctions, and more Fed speakers.